My name is Alberto del Valle with Payroll, HR, Workers' Comp. Do a little bit of everything. So today we just want to talk to you guys a little bit about how to actually set up payroll. It can be a little, overwhelming with so many tax agencies out there. What information you need to gather from your employees, what tax agencies you need to make the payments to, what the deadlines are. There's a lot to do with that. So what information do you need to collect to process payroll?
So it's just a question that I threw out.
Oh, okay. All right, so from the federal, let's start with the federal. So you need your federal tax ID number. You guys already know I have the websites and everything. This number is actually used to pay your Social Security, your employee withholdings, and your FUTA, which is your federal unemployment tax. Some will do bi-weekly, some are monthly, depending on what type of industry you have. Not industry, but how many employees you have. Depends on the frequency. You also have your quarterly returns, which is your 941s, if the federal tax ID number, that's what it's used for. And then, of course, at the end of the year, your W-2s and your 1099s if you have any. For the state, you will need the state of Nevada unemployment insurance number and the modified bond factor. Those are both actually employer taxes in the state of Nevada. Something very important, and I see this a lot, it happens to a lot of clients actually, to the smaller clients unfortunately, is they don't separate their operations account and their payroll account. Last time I presented, we talked a little bit about what the average payroll penalty is for a miscalculation or a late filing. It's typically around $900. So what I've seen is a lot of our clients are actually using their operations account for the payroll. So they're paying their weekly, the taxes go out, something hits the account, now they're negative, now they're bouncing checks to the state or the IRS. So be careful with that one. I-9s are very important. This is a way that the government actually verify who's eligible to work for here in the U.S. For W-4, this is very important. Make sure you have your employees completely fill it out and sign it. The reason this is important, or when there's changes to the employee withholdings, it's important because at the end of the year, this is what payroll companies are going to go by to issue the W-2s at the end of the year. So if there's any discrepancies, your employees might come in and say, hey, I don't have 10 dependents. Why am I being taxed at this rate? Now I'm not getting a refund. Well, then you can go back to your W-4 and say, well, this is what I have, you signed it. So if it needs to be an amendment, then that amendment fee will go to your employee. Unless you want to be nice and you want to pay for it yourself. A new hire report. You have employees, right? Mm-hmm. Do you know how long you have when you actually hire an employee to report it to the state?
I think I only have 90 days or something, or 30 days. Maybe it's 30 days.
Do you know what the penalty is on that? Yeah.
I don't know what the penalty is though. I think I sent somebody immediately because it's so scary,
Okay. The reason I say what the penalty is because it's 20 days.
Oh, it's 20 days.
I was thinking 15 in my head.
Yeah, I thought it was a month. Yeah.
Well, you'll be safe if you do it within 15 days.
Yeah.
But it's 20 days.
Okay.
So the moment you hire an employee, you have 20 days to report that employee to the state.
Wow.
Again, this might not be very important to you guys. Your employee works for you, right? But it's very important to the state. They want to know when they got hired, when or if they are eligible for collecting unemployment, and most importantly is if they owe any garnishments, child support, or levies. If you neglect to do so, and the state knocks on your door, they see they have this employee working for you for the past 6 months, and they owe child support or anything else, then they're going to see as you're protecting this employee, and they're going to penalize you for it. So be careful with that.
What is the penalty?
Well, the penalty is actually, it could go anywhere from $20 to $400. So $20 to $400 per employee.
Wow.
Plus interest depending on how long it's been. Minimum wage, I'm sure you guys know that, but state of Nevada, I don't think anyone's going to have an issue. But if you offer benefits, it's $725 per employee, and if you don't offer benefits, it's $825 per employee. Workers' compensation, it ties in with payroll. The moment you hire an employee, you have to get yourself a policy for the workers' comp. This actually ties into payroll, depending on the job category and how many hours they're working. That's how you're actually going to be charged. Yes.
Just letting you know you're pregnant.
Oh, already?
Yeah.
Oh my gosh, and I'm flying through this.
Yeah.
Let's do a quick pop question. Pop question. How can you streamline reporting?
So streamline
Because it sounds like there's lots of penalties, there's a lot to do. Businesses have a lot of responsibilities besides this.
They do. So I mean, there's a lot of different systems out there that you can actually utilize to process payroll, get your reports to your CPAs, your HR person, your broker. So it just depends on what system you're currently using, and if you're able to actually customize those reports to actually break down, for example, the workers' comp audits, at the end of the year, the information that your accountant needs to actually do your filings. So I believe, QuickBooks per se, you can certainly customize those, but it's a lot of do it yourself. Typically, payroll providers will have those for you, or they can actually customize the reports to actually meet your needs.
That's what you do.
That's what I do.
Okay.
Part of what I do.
And so let's say for everyone here that does not have employees, what's the scenario of creating payroll themselves?
So it depends,
For themselves.
It depends, I know if they're a sole prop, they really don't want to pay themselves because they don't want to be double taxed. Sole member LLC, not really. But if they're an S corp, you can probably talk a little bit more about that. But if they're an S corporations, then they have to pay themselves. A lot of the reasons why companies actually choose to, or one employee then choose to go that route, is because they get tax breaks at the end of the year. And that's one of the ways we can help them out.
I think it's like 25% they can write off and stuff too.
Yeah.
So it helps out.
So you guys also have individuals.
We do. Actually, our smallest client is a doctor that actually pays himself once a year.
Is it LLC?
I'm not
Is
sure.
it dividend?
I'm not sure.
Okay.
It's a corporate. I really don't know.
Might be a professional reporter.
Yeah, but it's a one-man company. It's once a year. We should every Tuesday. That's it. Real quick, you guys. I know I'm running out of time, but one of the things that I would look into, especially since you guys have employees, I'm not sure who's actually running your payroll, but oftentimes you're going to find that your payroll provider is missing information. An easy way to actually find this out is if you take a look at your quarterly returns, you're going to see if you're missing their tax ID numbers. One that's often missed is the state unemployment and your tax rate. Everyone's, I believe it's once a year you might get an audit and the tax rate actually changes, and if you don't provide that information over to your provider, they don't know about it, so there's miscalculations there. So just make sure you guys keep track of that as well.